Well, U.S. stocks pushing higher following strong earnings results from Meta and Microsoft, begging the question, is the AI trade so back? Joining us now, Mahn, Hennion Walsh Asset Management Chief Investment Officer. Kevin, big tech, can it just push away any trade war worries?
Yeah, I still contend that we're just in batting practice of a doubleheader as it relates to the AI revolution.
Wow.
And we're going to continue to hear more and more validation of that premise. We heard it from Microsoft. We heard it from Meta. We're going to hear it from Nvidia again. We're going to have to wait another month until they report earnings. But we learned from Nvidia earlier that they're trying to adjust to this new world order as it relates to tariffs and trade by onshoring the production of their chips. We learned that they're going to invest $500 billion over the next 4 years on U.S. production at TSMC. I happened to be in Phoenix, Arizona last week. I took a tour of the facility out. It's massive in terms of what TSMC's capabilities are on U.S. soil. And I think we're going to hear more and more announcements to that effect. Onshoring the production, the AI revolution continues, but they're going to be much more diplomatic and much more strategic with respect to the way that they spend their money.
You know, that's really interesting, and thanks for letting us know that you were out there, because now I have a question about that.
Yes.
You know, as you're thinking about the billions of dollars that get earmarked by some of these companies, as the Trump administration is saying it's going to roll out the red carpet, essentially, if you make these massive capital promises over multiple years into the U.S. and investing into the U.S., how much of those dollars are just going into other partnerships that already exist in order to ramp up, in this case for Nvidia, some of the production that otherwise they would have to put picks and shovels in the ground for?
Excellent example. And I'll go back to GM even this morning, going away from AI, what we learned from their CEO in terms of increasing U.S. productions. They're not going to build more plants. They have 50 plants in place already in the United States, and likely they would just ramp up production there to become more efficient as opposed to taking on all the CapEx spend and building new plants. So companies are trying to find their footing now to try and benefit from this, again, new world order as it relates to tariffs and trade.
I wonder if we can stick on Nvidia for a second here, because Jensen Huang, CEO of Nvidia, obviously just in Washington, talking about the risks of China being potentially on Nvidia's own coattails.
Absolutely.
To what extent is that a risk that you want investors to be keeping in mind?
I think we have to appreciate that the AI revolution isn't going to just have one winner. There's going to be multiple winners, but likely there'll be even more losers. So we have to understand the supply chain as it relates to AI infrastructure. It's not just the chips and the semiconductors. It also relates to the data centers, the cooling solutions for those data centers, the power solutions that right now are coming from multi-utilities through the form of natural gas and even nuclear energy. And then it's the end hardware and the software. So I ask all investors, when you're looking for investment opportunities related to AI, don't just consider Nvidia. Yes, Nvidia is the hub of the AI ecosystem, but there's so many other companies that stand to benefit from the continued growth of Nvidia. And look at those supply chains and trying to exploit them.
Are you saying to avoid Nvidia right now?
No, absolutely not. In fact, it's one of our largest positions at Smart Trust. I think it's a hold. We continue to add to it, but there are also potential benefactors, whether it's TSMC, ASML, you look at the data centers like Digital Realty, you look at the data centers such as Iron Mountain. How about the cooling solutions such as Vertiv? Even if you look at Modine Manufacturing, look at the utility companies, big old boring utility companies that supply the power. DTE Energy, Duke Energy, they have dividend yields above 3%. They have a beta of less than 0.5, which means they're roughly half the volatility of the U.S. stock market, and they're up about 14% year to date. Plenty of opportunities.
As you think about the energy that is required to power the data centers and the footprint of data centers of the future that are going to have so much of the generative AI running through those footprints, is there enough energy to actually power that as is? And does that make something like solar the sleeper pick for the AI trade?
I think it's one of the sleeper picks. In fact, it's estimated by the end of this decade, data centers alone will consume up to 10% of our country's entire electricity grid, a grid that's very fragile right now and prone to failure. So we're going to have to explore alternative power solutions, solar, geothermal, even nuclear, and as we're seeing, these small modular reactors that can power data centers on their own off-grid. So it's going to be a multi-pronged approach, but with that multi-pronged approach, I think there's going to be multiple investment opportunities as well.
And when you think about those investment opportunities, do you think that they outlast any DeepSeek, any tariff issues?
I think they do, because they're very different in complexity, right? DeepSeek is a cheaper version in terms of the true capabilities for those larger machine learning models that require more processing power and larger chips, you're going to have to look beyond that. And that brings in the Nvidias, that brings in the Taiwan semiconductors, and of course, in terms of lithography, that brings ASML. So once again, tremendous opportunities as it relates to the AI revolution. We're just getting going, but look to build a diversified portfolio. Don't just try and pick one or two winners.
Kevin, great to see you. Thanks for joining us in studio.
My pleasure. Thank you.